And this is this is the basis for introducing Islamic finance by the Muslims, because in Islam we distinguish between halal and haram. That halal is what is regarded as pure, blessed, and helpful, while haram is regarded as impure, tainted, and not capable of giving any blessing or growth. Therefore, haram has to be avoided and halal has to be pursued. So if haram is going to guarantee, is going to provide capital, is going to provide growth in capital, it's going to provide economic growth, it is rejected. And if by haram you will get 100% profit, but by halal you will get 10% profit, you are ready to eschew the 100% and go for the 10%, because the essence is the essence of belief. And this introduces a kind of filtration of business activities and economic activities. So if a business activity is tainted through the filters, then it is rejected. So essentially, what Islamic finance does with regards to conventional banking is to filter elements of conventional banking through its own filter that separates halal and haram. And as you can see, this very concept of filtration, it is what has come into the new drive for ethical, sustainable, and governance features of finance. That finance needs to be impactful. There has to be impact investing. And if the investment will only bring profit without having a social impact, then people are ready to turn away from it. And as you all know, there is this drive now for impactful financing. This actually is new, and Islamic finance predated it. So actually, Islamic finance has presented to the world a potential for filtration of investment and economic activities. That if an economic activity will provide profit, but then the profit is tainted in any way, it could be rejected. So the unfeathered tendency of capitalism, of achieving growth by whatever means, is eschewed primarily from the way Islamic finance grew. You know, historically, what attracted the main financial systems to Islamic finance was the growth in petrodollars in Muslim majority countries. You know, after the oil embargo of 1973, during the Arab-Israeli war, King Faisal, you know, he shut off the oil wells. And that brought the price of oil from $3 a barrel to $11 a barrel. And then the Iranian Revolution came in 1978, 1979, and a barrel of oil grew from $11 to $42 by 1979. So that amount of wealth And it was all denominated in US dollars. Because in 1976, as you all know, Richard Nixon, he severed the Bretton Woods agreements that tied the dollar, that tied the gold standard to the dollar. Central banks were able to present their dollar holdings and collect gold. And Nixon, he stopped that. But one of the conditions that they made was that the international trade was going to be denominated in the US dollars. So there were a lot of dollars and they were residing in American banks, and interest was being accumulated. And because bank interest, the debate of whether it is acceptable or not acceptable had already been finalized by 1930 among Muslim scholars, that modern bank interest is what was prohibited in not only the Islamic scriptures but also the Judeo-Christian scriptures, that it is the interest, the usury, that is declared as forbidding. So the interest wealth that accumulated in these banks, it became a challenge. And the excess funds in private hands that were looking for investment outlets, they were also tainted, because the markets, the financial markets, with their indices that were being tracked, they were all markets that had dealings in interest and other activities that bring about a tainted income was widespread. So there has to be an alternative. So the alternative was to create a banking system that will avoid fundamental prohibitions of interest, avoiding speculation, excessive speculation, which is gharar, like trading in non-real assets, trading in just doing speculative trading, as we shall see what is happening now with digital currencies. Digital currencies came to facilitate a system of payment and to introduce a new asset class. But instead of growing value, they became agencies of just speculation. People, when they go into digital trading or forex trading, they're not actually trading real assets. Deposit 1,000 and then you will have a leverage of trading in 100,000. You can withdraw the 100,000 and use them to import or export or for any real trading. You can only trade in the platform. So trade in the difference in the price movement, not real activity. This kind of speculation is what is rampant in financial markets. So it has to be avoided. Gambling and games of chance and betting has to be avoided. Dealing in prohibited items like pork, like alcoholic beverages, like many aspects of the entertainment industry, pornography, dealing in dangerous drugs and narcotics, dealing in also dangerous arms, weapons of mass destruction. These are avenues, these are the main filters that have to be avoided. But anything that is beyond this, it is regarded as permissible. So you can do anything. Now that became the basis upon which the alternative financial system came into being. And as we shall see, this has protected the new financial system from the near collapse of the global financial system that happened in 2008. You know, the crisis of too big to fail, which started from the toxic assets that the banks and the financial system were trading in, which grew out of excessive speculation. The Islamic banks at that time, which were only about 3 decades old, they were protected because they were not dealing in those assets. They didn't have those kind of financial papers in their vaults, and they were not exposed to those types of transactions because their filters had protected them, which was what made the then Pope of the Catholic Church, Pope Benedict, calling on the global financial institutions to take a cue and learn from what the Islamic banks are doing, what the Islamic financial institutions are doing, of ethical financing and not going just after the profit motive. So that showed the potency of Islamic finance, because anything that is done has to be related to the real economy. And this, we have seen it here in Nigeria, that Islamic finance has the potentiality of actually growing the real economy. How did we find that? This became clearly manifest with the introduction of the sukuk, the federal government sukuk. The first of which was in 2017. The sukuk were supposed to be alternatives to government bonds. Government bonds, they finance budget deficit. They finance budget deficit. If the government has got a revenue of 10 trillion and its budget it has budgeted 15 trillion, it has a deficit of 5 trillion. How do they make up that 5 trillion? There are many sources. One of the sources is to borrow from the financial markets. They borrow from institutional investors and high net worth individuals. So they issue government bonds, either through the debt management office or through the central bank. Mostly the central bank is for short-term government deficit. But for long-term, they go to the budget office. These bonds, they are an IOU from the government. The government says, I owe you, if it is a bank or a pension fund, because the pension funds are so many, in trillions. So government will go and mop up. They will issue the paper, and then the pension funds will buy. Government will give you an IOU, so much billions, and then with an interest rate. The interest rate is monitored by what the central bank sets as the monetary policy rate. So that reflects at the price at which the government is going to pay the IOU. So they will take the 5 billion that they need, 5 trillion, and then be paying interest periodically. That money is supposed to fund government deficit. But as you all know, you rarely see the impact of government budgets. You rarely see it. For instance, just recently, few months ago, the Minister of Health the coordinating minister of health, he said they have budgeted for capital projects, which are the ones that you will see, about 286 billion. But what they have received from government was only 36 million. 36 million. Can you do the maths? 36 million of 286 billion. What percentage is that? What percentage is that? Now, this kind of thing, it makes people feel that when they buy government bonds, they are not actually impacting. They are not actually impacting on the real economy. They are just giving money that will go down the drain, that will end up in with corrupt government officials. Now, the story of Sukuk as alternatives to government bonds gave a different story. It gave a different story. Because Sukuk, you can't finance government, you can't do an IOU with government under Islamic finance. Government cannot give you a paper and say, I owe you, give me money and I will pay you with a premium. You can't do that. So as alternatives to government bonds, they have to be project tied. So Sukuk were introduced to finance real projects of government. And the first Sukuk that were issued in 2017 was to finance road construction in the 6 geopolitical zones of Nigeria. Not the whole road, but patches of road, specific kilometerages. And you can see the signboards of saying Sukuk 1 from this kilometer to this kilometer. So the money that was raised from people who bought into the Sukuk, who invested in the Sukuk, they were papers that were issued by the Debt Management Office. The same Debt Management Office that issues bonds, they also issue Sukuk, which shows Islamic finance is a complement, an alternative, side by side with conventional. So when they issue the Sukuk, the banks will buy, conventional banks, Islamic banks, insurance companies, takaful companies, pension funds, high net worth individuals, they will all buy. Now, when you buy, actually, what you are doing is you are pulling your funds to enter into investment in that project of government. So the funds will be pooled together and be in the hands of a trustee company, which is a shell company that is bankruptcy remote. It cannot finance anything beyond the project for which the funds were raised. The special purpose entity will then enter into a contract with government to construct the roads. So the roads will be owned by the company, by the Sukuk investors, represented by the company. And then the Sukuk company will enter into a lease contract with government. That government will be leasing the roads as part of its own social work for the civilian, for the population. So government will be paying rentals for the usage of the citizens of those roads. Every 6 months, they will pay a rental. The rental will be like similar to what the bonds may fetch, a bit higher or a bit lower. But then it is not interest, it is not an IOU. It is for the usage of the road that the government is actually paying rentals. Now that kind of activity, imagine Government has budgeted 286 billion for projects. It is not able to release the 286, only 36 million. So where are the hospitals that are supposed to be built? Nowhere to be found. Where are the laboratory equipment that are supposed to be imported? Nowhere to be found. But you can't do that with Sukuk, because the money is not in the hands of government. It is in the hands of the registrar. The registrar is the central bank. And by law, the central bank cannot release the funds except with a certification by the delegate trustees, who will certify that the contractor has built the road and it is due for payment. And then they will pay. They will not receive their funds from the Ministry of Finance. They will receive their funds directly from the central bank. Now, the government has to pay by obligation the rentals, because if it does not pay, it will default. And the default of government is a sovereign default, which every government avoids. In history, very few countries have done sovereign defaults, Argentina, Greece. So countries, they don't want to default on payments. Governments, they don't want to default on payments. So whenever the trustees, they say, okay, it is time for payments, then every investor in the Sukuk will receive an alert of his own portion of the rental. And in the beginning, the first alert that came, they said, this is your interest payment. So people were disturbed. He said, you are telling us Islam no interest, and now we are buying Sukuk and you are saying interest payment. And somebody called me, he said, this is haram, ko? I can't eat it. I said, no, this is not haram. It is what they did is haram, but what you receive is not haram. So before they were able to change it, because they were following the default, that what the debt management office pays is interest coupon. They didn't know that this is a rental payment. Now the impact of that on the real economy was tremendous. Somebody wrote an article regarding the impact of the Sukuk. The impact of the Sukuk on the real sector of the economy. Contractors were paid. Now when contractors are paid, they are civil engineers, they have their own take-home salary. Before, they were sitting at home, working without salary. Laborers, cement dealers, sand dealers, transporters, even hawkers that were selling food by the roadside where the road construction is taking place, they experience economic activity. And in the end, you see that the money that you gave, the money that you use has actually impacted on the society. Now this is impact investing. So people feel happy that when they buy Sukuk, they see the impact of their investment in the country, contrary to what is there in bonds, contrary to just dealing in the financial markets. And there are many people that even though they will make money, they want their money to have an impact. So this is just one example. This is just one example. Another example, which I will share with you, is an example from the capital market, from a capital market investment. There was a project in Brazil, a real estate project in Brazil, a $6 billion real estate project in Brazil. And the funds were raised by a fund manager in Saudi Arabia. This experience, the fund manager himself, the CEO, he shared it with us during the first ethical investing finance forum in Edinburgh in 2014. 2014, 2015. I'm not sure either of the 2 years. They had raised the funds and they were about to begin the project. But the project involved cutting down a sizable part of the Amazon forest. You know, the Amazon forest in Brazil is the biggest forest in the world and one of the biggest sources of fresh oxygen to the whole world and one of the biggest contributors against global warming. So cutting down a sizable portion of the Amazon forest, it is going to give a very negative impact on the environment. When that project was taken to the Sharia board,